The following is an update and technical analysis on Tesla, a company of the consumer cyclical sector in auto manufacturers based upon the daily interval, in which I will additionally cover the outer layers of the weekly time frame, where I had mentioned on the 1st of January 2024, we were trading spot price 248.48, where I had covered on the video stock market analysis and trade ideas and coverage of the Magnificent Seven and its banner year of the entire Magnificent Seven, the biggest key inflection point, really among all of the biggest sector stocks to the NASDAQ and the big tech stocks, where we were trading off this primary reactionary downtrend line with various reactionary highs really across the entire sphere, coupled with a beautiful, nice, clean reactionary low with a nice snapback and or counter trend rally, where we had a ton of moving average support down below the 250 and exponential moving averages synchronizing in a consolidation phase. And short sellers, bear traders want to see a solid daily candle infused candle close below that key inflection point, issuing in a potential backtest and or retest amongst this primary downtrend line, offering the most valuable short, great risk reward short trade setup to the downside in initiation of that trade to go on to hit the 212.64 price support, and additionally the 194.50 in correlation of a major primary reactionary uptrend line. And here's the update. And really to the button, we ended up having that nice, clean, solid daily candle close below that key inflection point. We backtested really to the button there in confluence of the 50 exponential moving average, and the entirety of that trade thus far. It's good for, call it a 19.7% double-digit crash to the downside. And here we are reflecting upon the 194.50 target two, where Tesla had some big headlines rock the fundamental space, where they fell short on revenue and earnings, but the operating margin exceeded expectations. And despite the miss in financial metrics, the quarter wasn't too bad, with increased margins due to growth in vehicle deliveries and lower COGS offsetting ASP declines. The impact of the US deep freeze really emphasized the limitation of battery-powered heat in vehicles, likely contributing to Tesla's sales decline. All for the fundamentalists and fundamental traders to figure out. Back into the technical aspect of the stock, and we are trading amongst a monumental now key inflection point is based upon this primary reactionary multi-year price support level off the 2019 June reactionary lows, and this has been defended heavily amongst even going back to 2022 here. And if and when we go on to retest this key inflection point, short sellers, bear traders want to see an additional big daily sell signal, big breakdown below this key inflection point, issuing in what would be an additional breakdown sell signal, potential backtest to go on to rechallenge the 165.85 price support, and additionally the 153.73 price support level. Long traders, bull traders, they need to really defend really amongst this key inflection point, really at all cost. Great risk reward, long trade setup to the upside. Call it an aggressive long trade setup, where you have declining momentum indicators really across the sphere, where they could begin to self readjust and or have health poured back in a whipsaw-like reaction if and when we were to occur to get that some sort of bounce and or counter trend rally going once we go on to undercut the 194 price support, and then additionally knock around the primary uptrend line, which will be really around the 190-ish range for a prolonged setup. Great risk reward ratio to the upside. Call it an aggressive one if and when some of these key transitioning points are once again backtested and or retested. Zooming you out to the much larger picture upon the weekly interval. And here we are based upon what I would call a beautiful head and shoulder classic looking top with the potential neckline of this primary reactionary uptrend line. And that is a very key and telling inflection point that is starting to be breached as of now. Have additional price support levels at the 192.86, which is a great dollar cost averaging price support level with call it a multi-year big pivotal price support level that long traders and long-term investors would really need to defend to have a potential to remain the course of a potential uptrend, to go on to re-challenge the bigger primary downtrend line, call it a multi-year price support level, if and when long traders and or bull traders were to successfully defend some of these key transition points. An additional 154.06 would be your next target if and when you are there for that short trade setup. Personally, I am covering off that double-digit crash, and I am scaling out process on a potential backtest and or retest, starting the short covers, where I believe a lot of short covering could potentially take place here. And additionally, you want to really start to cover in some profits, set some stops at your entry, and cover some profit, take the profit. And once again, we had charts manufacture the headlines before Q4 earnings were released.